Well, g'day everyone. Welcome back to another episode of the Wilson Weekly. We've got Doc here again with some fantastic new news. Mate, what's been happening in the market so far the last week?
Well, hi Brenton, and I guess we haven't been really concentrating on housing market activity with all the weather issues in southeast Queensland, but hopefully that's all behind us now, and good luck to all the folks up there, particularly those that are still looking to get some electricity. So onwards and upwards, but I guess the world doesn't stop for the housing market, and we've had some interesting news over the last week. We have the latest February rent report, which is instructive because we've actually had a period, maybe 6 months, where we've looked to have a rebalancing in our rental markets. We know we had rents go through the roof in the post-COVID period. That sort of chronic undersupply, plus the reopening of borders, meant that the rental properties were in short supply. As I said, rents went through the roof. We had a period last year where that looked like it was starting to normalise to some degree. Maybe it was because rents got that high that people just couldn't afford to keep paying more, prospective tenants. And the federal government eased some of the numbers for international students, and they make up a significant proportion of demand, particularly for units in Melbourne and Sydney. So maybe a little less demand meant more supply, and we start to see a sort of a rebalancing of rental markets. So there was hope there that it would be a better environment for tenants. But unfortunately, the February news is not good news for tenants. We've had a sharp tightening in our capital city rental markets across the board, and it's looking like a bit back to normal, if you understand what I mean, Brenton. Low vacancy rates, not yet translating into higher rents, but if they consolidate these low vacancy rates, we will see higher rents. And it is really part of this systemic problem we have with being unable to provide, housing for our populace. So we'll have a look at the latest data from the February rent report. We're also going to have a look at the latest building approval data. Of course, I've already mentioned the issues we have with undersupply. We've just really stopped building new homes or building homes over the last decade. And that's all come home to roost for us, unfortunately. And part of that certainly has been the lack of stock for the rental market. We started to see some improvement over the past 12 months, particularly in terms of building approvals for houses. But building approvals for units still remained more or less flatlining at very low levels historically. We've sort of reversed that a bit, Brenton, where we're starting to see an easing in building approvals for houses, but we're seeing a pickup in building approvals for units. So the trend is now starting to rise. It's still sort of lower than historical averages, but it's now rising on the back of a lift in apartments. Now, that's sort of good news. Obviously, the problem is it takes a couple of years for an apartment building approval to actually become something you can live in. So even though it's happening now, it's not likely to ease our shortage of housing in the shorter term, whereas, building approvals for houses can tend to become, places to live in. Those approval to completion periods can be around about 9 months to 12 months. So it's a much more real-time environment to providing more housing, but that's starting to fall away a little bit. So some good news, bad news again in terms of building approvals. And of course, as usual, we'll look at what's happening in our auction markets. And auction markets have really been pretty good to start the year so far. And we're into March now, so I guess we're beyond the start of the year in a sense. But all auction markets really, particularly Melbourne and Sydney, are performing better than where they left off last year, particularly the Sydney market, which is got a bit of a head of steam about it and is continuing to record plus 70% clearance rates. Now, our early tracking data for March is showing some rebound in Sydney house prices. So those higher clearance rates are now looking like they're translating into higher prices in that Sydney market. And of course, we know we've had a cut to interest rates. and that's another positive driver for higher prices. But it's certainly been a positive start if you're a seller in auction markets in our capital cities mostly. Certainly tracking in most capitals above where they finished off last year, and not too far away from where they were a year ago, which was, of course, a particularly strong period of our housing markets. So I've done, as usual, a terribly long preamble. I think it's about time we got into the actual data. And let's have a look at that week that was over the past week. So if we can get the deck up, we can start to go through all that information. So let's have a look at the data for this week, the second week in March. Onwards and upwards we march, I guess we could say, to pun it out. But My Housing Market is my brand. We operate as independent analysts, commentators on the housing market. We work in close conjunction with our friends at Infinity, have been doing for a number of years. And we at My Housing Market and, of course, Infinity are all about the current state and future prospects of housing markets. And every week we bring you the latest information, latest data, the latest insights, the latest commentary on the factors and the data influencing what's happening in the housing market. So it is the week ending Wednesday, March the 12th. We've got still got a month to go before Easter, so enjoy the next week or next month or so of holidays before we get that Easter break, and then we're well and truly into the year. So this week we're going to look at, as I mentioned before, the February home rent report, January building approvals, and the latest weekly auction results. So in my preamble, I said that home rental markets had tightened over February. All capitals recorded declines in vacancy rates. Reflects not just the resumption of or the lack of supply, but the big picture there is that we're coming off the December-January holiday period. So we're getting more demand coming through. People are back to work, they're back to school, so that increases demand. So no surprise we're seeing lower vacancy rates. Capital city markets have obviously become challenging again for tenants, although they haven't really been challenging even with a better environment last year. Low vacancy rates means fewer choices for properties, and the tenants are in competition amongst other tenants for what properties are available. And as this continues, of course, we naturally see upward pressure on rental growth, which is good news for landlords, but not so good news for tenants. So maybe the end of what was looking like a rebalancing of the rental market after a significant period of tightening and higher rents. We look like we're back to the future again with very tight rental markets. So all rental markets tightened over February. The vacancy rates declined for both houses and units. Sydney remains the most expensive place to rent a property, Hobart the most affordable. Perth was the top major capital city for rental growth. Adelaide was the top for units. All capitals except Canberra have vacancy rates below 2% for houses, and Canberra is at 2%, and Melbourne units at 2.3%. So vacancy rates, with the exception of Canberra and Melbourne, are in the very, very tight, very tight environment. Here's the data. Mostly flat or slightly higher rents in our capital cities for houses over the month. Over the past year, Perth's been the big mover of the major capitals, up by 7.7%. I think it's important to focus on the vacancy rates. As I said before, all those vacancy rates for houses are very low. In fact, we've got half vacancy rates of the capitals are actually below 1%, which means there's very, very few properties for rent. Even Melbourne and Sydney that are above 1%, they're at 1.4 and 1.5. And Canberra's the outlier there, but that's still a low vacancy rate at 2%. We expect rental relief once we get vacancy rates pushing above 2%. Anything below 2%, we expect higher rents. And certainly if we're getting below 1%, we expect to see sharply higher rents. So we'll see how the next month pans out, March, but this is not a good start for tenants in terms of rental markets. When we look at units, a bit more of a mixed result there for units in terms of the monthly change. Melbourne units up 1.7% over the month, Adelaide up 3.2%. Over the past year, Adelaide's been the top performer, up by 10.6%. 0.9% in terms of unit rents. But again, when we look at those vacancy rates, they're a little bit higher than the house vacancy rates, but nonetheless, they're still quite low. The outlier there is Melbourne vacancy rates up at 2.3%, but still falling sharply over the month. So maybe that reduced demand from students, courtesy of lower migrant intakes from the government, its effect might be waning, particularly in Melbourne. But really no good news there in terms of vacancy rates for units in the capital city markets. Even with Melbourne, as I said, as the outlier, was a sharp fall over February compared to January. And as I said, there's a lot of seasonal effects here because we are moving out of that holiday period of December and January. So we wait to see what happens next month, see if this consolidates. But as I said, not a good start to the year for tenants, but landlords will be feeling pretty good, knowing that there's plenty of competition for their product out there in the marketplace in just about every capital city market. If you want to get a copy of the latest My Housing Market Rent Report, there is a QR code. You can take a pic of that, scan that on your camera, and it will give you a PDF copy to our latest report. Now, home building approvals were also released recently for the month of January. Another rise. So we've had back-to-back rises with building approvals, 5.9% over January after 3.8% over December. Again, it was units that increased and brought the numbers up. Volatile unit data is what we expect from that building approvals, those home building approvals. You can get big developments coming through one month, and then, of course, we don't get the same big development, so it pushes up and down. But what we're seeing now is a bit more consistency in terms of unit development approvals. So it's not sort of a monthly up and down now. It's become a monthly up. And when we look at the year to date, which is comparing this January with the last January, you can see there's some big improvements over the past year. So units are up 12.7%. Houses rebounded up 1.1%. Again, New South Wales was tops. Total homes up by 39.6%. And now we're starting to see those annual growth levels on the rise, driven by units. And it was a strong start to the year for all capitals, particularly for units. So units on the march, houses waning a little bit compared to where they were over the past year. So here's the data. Total dwellings, this is national building approvals, up 5.9%, 12.7% up for units over the year to date. So this is just the first month of the year compared to the first month last year. Big rise in unit approvals, 41.6%, but over the full year up by just 0.4%. So even though we're still underperforming on a year-on-year basis, the year-to-date basis is looking a lot more promising in terms of unit developments. You can see there, this is the chart, the trend there. That's the 4-monthly trend for national home building approvals. You can see it's just starting to rise again now, and that is off the back of that improvement with units. So trend's now starting to rise, the underlying trend, and the approvals we had over January this year well ahead of what we approved over January last year. So some good signs there for resupplying our undersupplied housing market, but still some way to go. And it is units that are driving the improvements so far this year. And as I mentioned before, it does take some time for a unit to become, a completed property. So nonetheless, it is good news, but we're still tracking in overall numbers well below the government's target of over 200,000 completions a year. We're not even getting 200,000 approvals a year at the moment. You can see there houses compared to units. Units are really on the rise when we see the trend, that moving average, 4-monthly moving average, rising quite strongly and well above where it was a year ago. Houses, the trend's just falling away a little bit, but still the number of houses approved over the 3 months to January was higher than the number over the 3 months to January last year. This is the year to date, so this is just January's data. Interestingly there, Sydney's taken the lead in the number of houses approved, but this is on the back of some very big developments coming through in Sydney for units. I think maybe we're starting to see governments becoming a bit more proactive in terms of planning approvals for units because they are under the pump and maybe there's a little bit more flexibility, certainly a little bit more urgency about getting some of these unit developments approved. And we're certainly seeing that in Sydney, big number there, which has lifted the overall number of approvals in Sydney over January to the highest in the country. So look out there for Sydney going forward. When we look at the year so far, in terms of the types of approvals, you can see, look at the rise in Sydney, 335% increase in unit approvals in Sydney compared to January last year. That's over January this year. And big numbers there in Brisbane, big numbers in Adelaide. Also rises there in Melbourne and Perth, of course, which has a smaller unit market. It's down in January compared to the same period last year. But can you see that big surge in unit development this year so far compared to the same period last year? So, as I said, I think state governments are maybe becoming a bit more proactive in terms of allowing building approvals for units. And, you know, there is more opportunity for governments to get involved in planning activities for units than there is for a much more stable environment, which is providing building approvals for houses, which is typically on the fringe of the market. So some interesting data through January here in terms of building approvals, particularly for units. The long-term trend, you can see that trend is now starting to rise, still well below the annual. This is the annual rate of growth, or the annual numbers of approvals on a month-to-month basis. Still well below where it was at its peak back in 2016, but clearly on the rise now. So some hope there for resupplying Australia's housing markets, but we've got a long way to go, Brenton. So, but you've got to take the first step to move forward. Again, you can see, just looking at houses versus units, houses just starting to taper off, still below its pre-COVID peak there, and units are massively below where they were back in 2016. This is the number of annual approvals, down 53.7% since that peak in 2016. So this is the number of units over a year on a month-by-month basis. But you can see there behind the black bars, which is the housing market chart, that unit trend is clearly on the rise now and looks like it's bottomed out, but a long way to go. But certainly this data is providing more optimism that finally we're off and running in terms of resupplying our housing markets. So that's our economic data for the week. Let's have a look at the latest weekly auction results. Early March auction results continue to provide steady clearance rates. Auction numbers were lower last week, particularly in Melbourne, because Melbourne had the Labor Day long weekend holiday, so Melbourne was in pause mode. Auction numbers were low, but they were low in every other capital as well. But certainly this year we've continued to report generally positive results. Solid listings and clearance rates are continuing to track above where they finished last year and not too far away or equivalent to where they were a year ago. And of course, all this buyer and seller confidence is being enhanced by that recent RBA interest rate cut. So this is the data. City auction numbers well down the week before, but the clearance rate held up just about the same. Melbourne similarly, a fraction of the auctions the previous weekend because of the holiday. And you can see their clearance rates in Sydney are also about the same as where they were a year ago. Auction numbers about the same. And Melbourne similarly tracking in those higher than 65% plus range so far this year, which is some good early signs for that Melbourne market continuing. Sellers would be wanting to see above 70% because these sort of numbers would indicate maybe some slight price rises in the Melbourne market, but certainly as we're tracking, as we do on a daily basis, price data is on the rise in Sydney, and we shouldn't be surprised given those higher clearance rates so far this year. Brisbane, same old for Brisbane, lower clearance auction numbers, clearance rates lower, and clearance rates lower than where they were a year ago, which was a boom time period for the Brisbane market. Adelaide down a little bit on the weekend, and it's tracking well below where it was a year ago. And we've seen some softening in that Adelaide market, still growing, but not growing at the very strong rates that we were used to for most of last year. And another good result there for Canberra. We've got to get these clearance rates above 65% to have any sense of prices growth. But the Canberra market looks to certainly giving some signs of consolidation to moving above that 65% or moving towards it. We'll see over coming weekends. So this is the monthly clearance rate data to the month of March so far. Sydney 74%, which is about the same as where it was a year ago, and tracking higher than where it was at the end of last year. So unequivocally a good start to the Sydney market. No surprise we're seeing prices growth resuming in Sydney. Melbourne's actually higher than where it was at the same period last year, and also tracking higher than where it was for most of last year. So let's see if Melbourne can continue that better than normal performance, can we say, for the rest of March. The Brisbane market down a little bit over compared to the same period last year, but certainly a little bit higher than where it finished off last year. And Adelaide market a little weaker than where it's been. Still seeing prices growth coming through in Adelaide, but certainly nowhere near the strength that we saw over the past year. And the Canberra market is tracking higher than where it was a year ago. And I think there's some good grounds, at least for some optimism going forward, that we're on the verge of a rebound in that Canberra market, which that lower interest rate will facilitate. But we've sort of been saying that up and down for a while, so we won't be calling it as yet, but we're keeping our eye on that Canberra market over the remainder of the month. If you're looking for the latest auction data, it's a very good real-time insight to what's happening broadly in our housing markets. You'll get on my LinkedIn channel, Doc Andrew Wilson at LinkedIn, every Saturday night at 6 o'clock, the Capital City Snapshot, and then the full national report, Sundays at 9 o'clock on my LinkedIn site. That includes the regional breakdowns for Sydney and Melbourne and the top 10 sales under the hammer for all the capital city markets. So that's on my LinkedIn account, there's a link to that there. If you missed the latest national weekly auction market report, there is a QR code that you can get a PDF copy of that if you scan it. As we always finish off, Brenton, here's a plug for the My Housing Market Suburb app in conjunction with our good friends at Infinity. There is a QR code that you can scan to get access to that app. You need to get a password from our friends at Infinity. So go through Infinity. They'll tell you how to access this fabulous little app that gives you an insight into what's happening on a suburb basis in real time for all the suburbs in Australia. You can look for prices or rents. These are asking prices, current asking prices. You can filter it for each of the capital city regions or the outside capital city regions. All the suburbs that have data are there. You can filter it for houses, townhouses, or units. And you can also filter it for the number of beds. We've used Blacktown as an example there. You not just get the median asking price, you also get the low and the high. So you know what the low price is asked for that particular 5-bedroom property in Blacktown, and the high price, and it also tells you the number of properties that are for sale. And you can do exactly the same thing for the rental market as we've done there in our snapshot. So if you want to know what's happening in your suburb, this will give you that real-time insight to what the market is asking at the moment, not just the median, the high and the low, and also tells you how many properties there are for sale or rent currently. Now, we also have an add-on to this, particularly for our investor friends. So what we have here is the top 10 yields, that is the return on investment based on current rent and current asking price for each of the regions, either capital city region or outside capital city regions. So you get the top 10 yields there, ranked in order. We're using New South Wales, Sydney, 1-bedroom units here. So these are the top 10 yields. We also provide the vacancy rate, the number of properties for rent, and the number of properties for sale. So this provides you with some fantastic insights in terms of investment returns, to do some scientific modelling, I guess, based on what's happening nationally in our housing market. So a great little app there, and you can compare state by state, regions by regions, and type of properties and bed numbers across the board. So a fantastic little opportunity there, particularly for investors to look at return on investment, but also to understand where the activity is in those markets. So next week, we're going to look at the regional house prices, which is always interesting, which regions are performing best in each of our states, February regional house prices. The latest January inflation data, we'll have a look at that. This is very important news in terms of where interest rates will be pitched. So let's see what inflation is doing, and as usual, the latest weekly auction results. So if you want to get a copy of this week's report, again, you can scan the QR code. It'll give you a full copy of this week's report, which we've got through fine, and I'm so happy about that. And I'm so looking forward to next week when we will bring you our next thrilling episode of what's happening in our housing market. So, and I'm looking forward to seeing the regional performances over February, which regions, and these are local government areas. So it'll be interesting to see which regions are performing the best in each of the states. So thanks very much for that, Brenton. And I look forward to doing it all again next week.
That's all right. Thanks for joining us, Doc. Appreciate all the insights there, mate. And we'll look forward to seeing you next week.
Thank you. Good luck.
Thanks, mate.